All right, good morning. Today is March 5th, 2025, and I'm back with another edition of the Wednesday Live Show. I had to skip last week because I had a bunch of stuff going on for some reason. I don't even remember what it was, but I was really busy with stuff. I couldn't do a show. I had too much going on. But anyways, I'm back this week, and boy, has it been a wild couple of weeks. The volatility in the market has just been absolutely insane. The ranges have been huge. There's been up and down action, big down days. Basically in the middle of a pullback in the overall market, and it's interesting. Wait till you see some of these charts I have marked up here. But first, before I even get into that, let me I have this usually like to try and bring a couple of graphics. I just have one today, and this is interesting. I mean, this is from a couple of weeks ago, and I don't remember bringing it to the show, but I've been talking about valuations for quite some time, and I've seen all sorts of different charts and various graphs about how overvalued the market itself is. And this is an example. I actually had a better one, but I kind of like this one. I had a better graph that listed like a dozen different historical metrics, and basically any way you slice it, the market is expensive and overvalued. And quite frankly, I mean, if you look at this chart, which is cool about this goes back to 1900, right? And so, there's the roaring 20s and the Great Depression, but if you look at the various metrics, and there's only a handful of them listed here, you can see that we're pushing the extremes here, right? And so that's not a good sign. And quite frankly, there's so many sort of offsetting cross currents in the market. Like if you see the CNN fear gauge index or whatever, you see that, right now it says like extreme fear, and so the sentiment's really hard to gauge at this point because the bigger picture sentiment is that there's a lot of froth in the market. It's undeniable. Some of these stocks, especially like prior to this current pullback that we're in, some of the Magnificent Seven stocks and some stuff like Plantair or whatever with 100 PE, and just valuations are just have been stretched, and so this is a good example of it. And I mean, it's not just PE, it's of course, a long time ago, geez, it was last year, we talked about the Buffett indicator was stretched, and so it's just valuations are stretched, and there's a lot going on, and so I don't know if you watched Trump's thing last night, but anyway, the political climate is kind of interesting because the market's just getting whipsawed up and down and all over the place. The volatility's picked up, and we haven't had a pullback like this in a long time, but it kind of makes sense based on what I've been talking about with valuations. So here's the S&P 500, and there's the 200-day moving average. Look at yesterday's low. Yesterday was a wild session. Um, Day before that was the biggest sell-off of the year, and I mean, look at how these ranges have expanded here. It's just really, really something. And I mean, today looks like nothing, but we've already been sort of all over the map. A couple things to note here. This is the 50-day moving average, right? And so the market broke below it, and now you can see is sandwiched in between the 200 and the 50, which are spread pretty far apart. Um, as you recall, like a couple of weeks ago, I had drew this the last time I did a show here, I believe. I drew this box and talked about the idea of it breaking out of the box a little bit and then coming back in, which is exactly what happened. And this, you can see a couple things on this chart. One is that this current sell-off here, just over the past week or so, has taken us below the prior lows. So let's see, I got a few charts here. This is a good one. This is the one that I wanted to. This is the one I wanted to demonstrate where the price is sandwiched in between the 50 and the 200. This is the best example of that. And so you can see what's interesting is how the 50-day moving average has been acting as sort of overhead resistance here over the past week or so, ever since it broke below it. It was kind of, there was a little support at the 50-day moving average back here when the market was zigzagging around at the highs. Been an interesting year so far. Um, oh no. Boy, I don't know what just happened there. Huh. Well, that's very strange. The first time I think that's ever happened. So let's see, which chart were we on here? Oh, here we go. Huh, that is very strange. Let me just go down my list here. So here's a daily chart with the big major level of support extended out. And you can see this is not a candlestick chart, but a bar chart, which I used to favor, and I'm sort of getting back to candlesticks, honestly. But this particular chart here shows this big sort of level of support just below. And so quite frankly, I mean there's a lot of support right here. There's a lot of support at the 50 or at the 200-day moving average, and then should we poke below it, there's a ton of support just below. I was looking at this yesterday or last night. Look at this. The last time that the market broke below the 200-day moving average, like touched it and broke below it, was back in October of 2023. So it's been a year and a half practically since the last time that the market touched it too. If when I zoom out like this, it looks like it actually touched, but it came close, but it didn't. Something else to note here on this particular chart is the RSI. RSI is getting pretty low. It's kind of buried. It never got down to like super oversold. But then again, going back to last summer, you can see the RSI got overbought a couple of times, and then it worked it off on these sell-offs. But it's just been kind of drifting in the middle of the channel, not extremely overbought or oversold. The weekly charts are really fascinating because I have a couple of marks on the weekly chart, and this particular one, this looked a lot different. This looked different, this morning because we're getting a little bit of a rally here. But you can see that, and the next weekly chart I have has a different trend, has a longer trend line. But this real short sort of trend line here, we poked below it and it was looking pretty rough, and it won't surprise me to see like a little tail here. Of course, there's no telling. I mean, the way the market's acting, and apparently there's on CNBC they're saying to expect an announcement on tariffs this afternoon. So they're floating a trial balloon out there about, the tariffs are going to go into effect, but there may be some exemptions. And so, that's this is very reminiscent of 2016 through 2018 with all the tariff news and the headline, all the crazy headline news, and the idea that that the market was on pins and needles throughout the session. But I got to tell you, it's a heck of a lot more exciting, right? I mean, finally, the market was really sort of boring in this box right here. I gotta admit, there's nothing worse than just sort of a sideways, choppy, boring market, narrow range days, and that. Back over here, as you recall, this humongous down day, the biggest down day that we've seen in ages, was the result of hawkish Fed, right? The Fed pausing instead of cutting rates. And so that sort of kicked off a period of volatility expansion. And then once the market broke out into this little box here, back in January, once we like sort of tagged this new little all-time high and then came back in, it's kind of been, it's been choppy and it's been boring. Um, the most exciting thing is the sell-off that we're currently in. So finally, there's some action back in the market. We're starting to see some long-range days, and notice well, there's a couple things here, right? Like I said before, the market broke out to a new all-time high, and then that's all she wrote. And that's kind of why I drew this box here. Like you can see this previous high, and it took several weeks before it finally made a new high, and that's just that's kind of insidious type of price action to make an all-time high like that. And in the history of the world, of the market, after spending several weeks consolidating, and actually several months, because this prior high back here at 6100 was that was sort of a line in the sand, and then new all-time highs and sell off. And so but now we got a real pullback underway here. So you can see sandwich between the 50 and the 200. um, the market is, it's oversold, but not extremely oversold. However, based on the idea that over the past couple of weeks we've had, a pretty significant sell-off. Actually, I just call it a pullback. It's not even really, well, I don't know. I don't think you would even categorize it as a correction yet. But it's going to be interesting to see if the S&P can hold this 200 day. And of course, it's going to be based on news. That's the big thing about it. So, one more chart I want to look at. And to me, this is sort of the big kahuna right here. As a matter of fact, I've had all this drawn on here for months. Months. I mean, but interestingly enough, I actually moved this blue line. I had the blue line coming up against the body of this candle, and basically the low of this one. And the more I looked at it, the more I thought, well, it would make sense. And so, anyways, I moved it so that last week's low, and this looks pretty good. This honestly, it starts back here and it takes the low of that candle, which perfectly intersects with the low of last week. But what you can see here is that we've broken through it, and so it's we're looking a little bit rough here. It's going to be interesting. There's potential for, and you can see these 3 weeks, and of course it's only Wednesday, but it wouldn't surprise me to see a little bit of a rally the next couple of days, unless some sort of news events torpedoes that. But it wouldn't surprise me to see a rally similar to last week, right? Last week we had a huge sell-off, and then we got sort of a relief rally towards the end of the week, and we could see the same thing here. So, and of course, there's this huge support level directly underneath. I should probably go ahead and it's been a while. It's been a long time since I drew that. So I'm going to extend it over. Well, I might as well just extend it over and save this, because in the event that the market does break the 200 day, you can see that, and I had this drawn on the daily chart too. So this is basically drawn from these highs to these lows, right? Like the high over here last summer, before that little summer pullback. So it's an interesting spot here. It's a very interesting spot. And the first weekly candle that breaks a trend line like this, to me, is sort of a big kind of caution flag, and we could spend a little time, in this, I guess you call it quadrant or whatever, and the market could rally back up, or we could come down and test this support here, which it's a big support level. So if we break that, boy. Um, but then again, let me extend this out. Let me extend this way out, and you can kind of see the perspective. And I've been talking about this for a while too. This is the post-COVID rally, right? There's the COVID sell-off. There's the post-pandemic rally. And then I've been talking about how, this is a very similar sort of rally off of the lows from October 2023, very persistent, very few, there's no actual corrections in here. I mean, that's a pullback. So people like to use the people like to use the terminology in different ways, dip, correction, pullback, that type of thing. But I mean, so far we haven't had anything. This is a correction. I mean, that wasn't. I don't think it was a bear market, but it was a very significant correction. This was a pretty significant pullback in 2023 from summer to fall. But anyways, we've had a move similar to this one, and when we broke that trend line here, it got broken decisively, and the market did not get back above it, right? And that was of course the beginning of 2022. And you can see that 2022 was it was a pretty rough year, honestly. And it remains to be seen because right now, we're still looking at the candle that's actually breaking the trend line. They have similar angles too. The current one's actually a little bit steeper, to be honest with you, which is kind of interesting. But there's some similarities there. But the duration of this particular run up, before it finally broke the trend line decisively and traded below it, and we got a correction. This one's not quite as long. But then again, when you think about valuations, think about the valuations. That makes me a little bit nervous, and the fact that this new administration, I get the feeling that, and I'm not the first one to mention this, but I get the feeling that they're going to, take all their drastic measures up front. Like I don't think they're not as worried about what the stock market's doing here because, they've already said that fixing the stuff that they need to fix is going to require some pain, upfront pain, and that's what the tariffs are about. So I'm not going to get into a big discussion about the tariffs because that's one thing, or that's something that everybody's been talking about, their opinion on the tariffs and that, and there's different ways to look at it. Obviously, Americans don't want to pay higher prices on stuff, so that's going to be a problem. But then again, this country has spent 30 years shipping jobs overseas, so let's look at the VIX here. This is kind of interesting. So this anomaly here, I mean, I remember it, and I'm not sure I even remember what it was, but I mean that's a huge anomaly, and it's skewing the chart. So I'm gonna get it off the chart. Um, VIX over 20 is volatile market conditions. The thing about the VIX, whoop, there it goes. Yeah. The thing about the VIX is that, it tends to spike up, and every time it gets over 20, it's been pretty short-lived. So it would be interesting to see the VIX remain elevated because that just means that and for a long time I've never actually trusted the VIX as an indicator of anything, but at this point in time it seems to be sort of reflecting the sell-off in the market and the increased intraday volatility, which is interesting. So um, real quick, let's look at oil. Man, oil, huh, I'll tell you, this is actually this is actually kind of a good thing, right? I mean, you don't want oil collapsing, but oil under 70 bucks. And I'm not sure if this is how they update this. So, I mean, I could look over at CNBC. I'm sure they got the real time, but basically, the over and under on oil right now is about 70 bucks, which is good for inflation. I guess I save that little support line there. Zoom in a little bit here. Yeah, over and under on oil, $70. You remember there's a couple times recently that I talked about you really want oil between 70 and 80 probably, not in between 80 and 90. So the lower it goes, I don't honestly mind seeing it between 60 and 70 because I'd like to see the price of gas again, below $3. So it's been fluttering right around a little over $3 here for a long time. But this is an interesting chart because it's a weekly and it goes back to, well, this line goes back to 2023 basically. So you got, an entire 2 years and a couple of months here, and we're at the low end of the range. So theoretically speaking, if for some reason, and if you watched Trump's speech last night, he did happen to say drill, baby, drill, which is kind of interesting because, um, I mean, drilling oil under, ramping up oil production under $70 is probably not something that all the majors want to do, but it'd be nice to see oil kind of stabilize between 60 and 70 because that potentially will help offset some of the potential inflation from tariffs. So it's going to be interesting to see how this all plays out. So I'm pretty optimistic, though. I can't say I'm extremely optimistic about the market itself because of the overvaluation. And I mean, the old saying, markets can stay overvalued longer than you can stay solvent. But really, this market needs some of the steam let out of it, and now's probably the best time. And quite frankly, just all the silliness, and they've turned the market into like a gambling casino, and you get, I mean, there's a generation of traders and investors that have never even seen a recession or a bear market, other than I guess the pandemic or whatever. But anyway, I wanted to look at ARK real quick here because ARK's kind of my proxy for it's my proxy for sort of animal spirits, momentum stocks, small caps, you name it, um, risk appetite. So, anyways, nice breakout of that box, which I haven't touched this. I haven't touched this box obviously since last fall. Um, well, now my YouTube channel's telling me that I'm having a problem. Hopefully, it'll pick back up. Very strange stuff going on today. I haven't had any internet problems here recently, so I don't know why YouTube's giving me a weird message, but it is. So we'll see. We'll see if this broadcast gets interrupted or if it picks back up. Anyway, back to ARK here. That's a pretty nice basing pattern over a long period of time. It broke out, and now it's come back in, and um, interestingly enough, ARK is below the 200-day and above the 50-day. It's like sandwiched in between them here. So it got a pretty good rally. I mean, when it broke out of this box here, it got a really, almost $70 and it's now down to 50. But look at the last 3 weeks here. This this is a pretty good demonstration of the sell-off that we've had here. If you think about it, from 70 to 50. There's some other stocks that I don't want to go over. I don't want to go over all of the Mag 7, but this is a weekly chart of Nvidia, and this is pretty ugly, to be honest with you, right? And see, the thing about it is that I don't follow it from a fundamental perspective so much, but the whole idea that this particular one chip stock was, the best stock in the world, the most widely owned. I mean, you remember when Apple was the stock that everybody talked about incessantly, and of course they still do, but then Nvidia kind of took over, and a lot of the speculation, geez, I saw, I saw, it's been a while, but I saw like some teenage girl on the NBC Nightly News talking about investing in Nvidia, and I thought, well, there you go. But stocks like this, Palantir, I guess you call it or whatever, I think this was like a big earning. This is a weekly chart. I mean, and so this is just the kind of craziness that we've all seen in the market, right? And I mean, you talk about valuations and that type of thing. And so, you get into these environments where you got a great company, you got great companies and they're growing and doing everything right, and there's nothing wrong with the company, but investors, and or the general public goes crazy and they all pile into it and then they talk about it, constantly on CNBC, and next thing you know, they just drive these things to, insane valuations and they go parabolic and this and here's an example was that SMCI, right? Remember when this thing was all the rage, and of course didn't this split like 10 for 1? This is like a $1,200 stock. And so I mean this is an example of the type of thing that we've seen in this market. And it's not just, it's not just a recent phenomena. This has been going on for, since the pandemic. Since after the pandemic, and of course you remember the pandemic mania, right? Here's a weekly chart of Zoom. I haven't looked at this in forever, to be honest with you, but yeah, this is like the South Seas bubble here. This is what bubbles look like. And so, various stocks go through various stages, and this was, during the pandemic, everybody was going to video conference with Zoom, and of course, they still do. I mean, this is where a successful company where, I have Zoom on my laptop, and I've done a couple of Zoom meetings, although I don't like to do that. But I mean, Zoom is a very viable company in technology and this and that. But going back to what I said a minute ago, investors, they go crazy and they start running these things up, and then valuations get stretched beyond imagination, and eventually reality sets in, and that's what you get. And so these parabolic moves in stocks where they get overvalued just don't, they just don't last forever. So anyway, long story short, this is kind of an interesting chart. This would actually be an interesting one to do a little bit of research on, because in theory, this is a pretty well-known brand. I mean, it's still $75 a share, but it's not it's not 600, right? And so, yeah, I like this is a pretty decent basing pattern. Quite frankly, this is a decent basing pattern, and it's coming out of it. And so, in theory, this company could be worth looking at. Boy, it's had a really rough week last week. The past few weeks, it's come in quite a bit. So this looks like a pretty good trading stock, to be honest with you. Um, Anyway, so I don't know what else I want to look at on my list here. Well, I guess the last one, got just a couple minutes left. Microsoft. Microsoft, one of the most important companies on the planet. It basically, I drew these lines here, and you can see what happened, right? It was working itself inside of this wedge. I drew like a support level here, and so it broke down. It looks nasty now. I might as well delete that. The only thing this has going for it right now, the best thing Microsoft has going for it, and quite frankly, if for some reason if for some reason the market is just throwing a little fit right here, I'm going to save this. Um, this is a weekly chart too, so remember nothing happens quickly in a weekly time frame. There's the 200-day moving average way down there. There's the 50-day, and so technically speaking, it's kind of a broken pattern, but man, it's sitting right on support here. Whoops. Didn't mean to draw that. What I meant to do was clean the chart up a little bit. You can see it tested like major support this week. Do I dare extend that out? I might as well. I might as well while I'm here because this is a chart that I typically come back to. Anyway, long story short is if this week's low holds here, you could see a pretty significant bounce back up on this to the underside of the 50-day, back up to, theoretically it could work its way all the way back up there. So this is kind of an interesting chart. In the bigger scheme of things, it's pretty low risk entry in this area with a stop just below this week's low because you can see that major area of support. And that doesn't mean that, next week or, Friday, if the market decides to throw a fit based on these tariffs going into effect and all that, anything's possible. But just looking at this weekly chart here, I think this is an interesting spot, and all bets are off under last week's low. So thanks for tuning in. I will see you back here same time next week.